Let's bring in some more perspective with regard to the impact of all of this on economies around the world. Now, Jagdeesh Sir, senior economist and former member of Prime Minister's Economic Advisory Council, is joining us here on the broadcast. Thank you so much for speaking to us here on Mirror Now. The focus has been so far on, oil and gas, and rightly so. Of course, that is a big aspect and the impact that could have. But going beyond oil, there are several other factors, whether we talk about wheat, whether we talk about corn, a lot of aspects here where the impact is going to be felt in various countries.
So it is not just oil. Of course, oil price has been increasing now. It has reached $120 per dollar. But that will have the multitude impact. One, of course, the import cost of the oil. And when the crude oil prices goes up, the petroleum products prices will go up, impacting the cost of production of those you use the petroleum products as a critical raw material. Even otherwise, the rest of the economy also, the petroleum products prices going up means that it will lead to the rise in the cost of production through the rise in the transportation cost. And more than that, in this sort of the uncertainty, quite possible that the foreign institutional investors may also withdraw from the Indian market. And if they withdraw, there will be a market fluctuation, market may crash, and the rupee will get depreciated. Already the price of the crude oil is going up. And in addition to that, if the rupee gets a depreciation, there will be further impact on the import burden. And all this will net result is that current account deficit will go up. And besides that, supply chain gets disrupted. It is not just one petrol, even the rest of the products also. The supply chain may get disrupted. And since the Russia is one of the major supplier of the defense product, I doubt very much whether they are in a position to maintain that supply of the defense product to India when they are involved very much in the war with the other country. So there is a lot of uncertainty. And apart from that, see, already the 113 countries who are under economic crisis because of the pandemic. Now with this war between the two countries will lead to, it will have a further impact on the economies. And the export from India as well as others, that will also get affected because our capacity to export to our markets, be it US or the other market, that depends on how strong these economies are. So if the world market gets affected, even our export performance gets affected. And when you talk about the export performance, it need not be only the manufactured product. There are also the export from small scale sector also. It may be from Tirupur, it may be from Surat, or it may be the Jalandhar. So the widespread impact on the economy. And whatever, apart from that, when the market is not at a comfortable level, whether the government is in a position to come out with this disinvestment as per the schedule. As it is, the government is about to bring out, the LIC is about to bring out with the IPOs. Now, I think when the market is not in the comfortable situation, I doubt very much LIC will come out with the IPOs at this point of view. And plus, whatever the other disinvestment program the government is scheduled about, I think 72,000 crores or that. So that may not, as it is the last year, the government could not fulfill that target of disinvestment. So this year, again, it may affect it. The fiscal deficit, last time it crossed to 6.9 as against the budget target of 6.8%. That too, assuming that the economic growth will be at 9.2%. But now it has come out that economic growth will during this year is 8.8%, which means that the last year also fiscal deficit already got widened.
Yes.
Now with the current development, and I'm sure that this year also there will be imbalance in the fiscal affairs. So that will impact the whole economy.
Yes.
And ultimately, the people will have to pay one, maybe in terms of the taxation. And apart from that, a cost push inflation. It is not just the crude oil. When the prices of other products also go up,
Right.
definitely there will be cost push inflation.
Yes, absolutely. I think you've, highlighted all the various angles, very simply to understand what exactly this could all lead to. But on the point of inflation, how serious is the worry at this point in time? We're already at a scenario where US is seeing decades high inflation at the highest level in decades. But back home here in India, the situation is right now, the elections are, of course, on. Once that's over, we are going to see a significant hike in petrol and diesel prices, obviously, but that will lead to other aspects as well. So how do you see inflation really playing out, given that it has been a big concern even for the central bank as well?
No, as it is, we are in the border because RBI's inflation targeting is 4% plus or minus 2%. It is already in the range of 5.9 to 6%. Even the last meeting itself held on the February 10th of the meeting, at least one member voted against the rest of the people's opinion. He wanted the RBI to follow what called the tight monetary policy, that is by raising the policy rate. So now that the pressure is building up, because right now the RBI's approach is the focusing on the growth, since we are yet to revive the economy and coming back to the normalcy. Though we are expected a growth rate of 8.8% this year, if you take the negative growth of the last year compared to 2019-20, there is hardly a growth rate of 1%. So their focus is naturally on the growth. But at the same time, there is a pressure from the inflation front. So probably soon the government, RBI will have to change its stance, because so far both the government as well as the RBI, their focus is to promote the growth. So, and again, when they are trying to promote the growth, it is mostly on the what we call the supply side oriented policy measures. But there is uncertainty with regard to the demand side. Now, if they are compelled to adopt the tight monetary policy by raising the policy rate, then the demand consumption, will further get affected. Already there is a fall in the consumption after the pandemic, and there has been criticism that the sufficient measures have not been taken in that direction. And in spite of the liberal attitude of both RBI and the government, investors are still having the wait and watch approach, because though the liquidity is available, government policies, RBI policies are accommodating in nature. But why would investor produce if there is no certainty about his product getting bought in the market? So, but if RBI initiates a measure in terms of the raising the policy rate, that will have the further adverse impact on the consumption expenditure, and leading to the further adverse impact on the overall what we call the growth. Because both as even if they are they're trying to initiate what they call the investment to boost the investment, I don't think that will yield the result unless and until consumption picks up, which is bound to get affected with the cost push inflation.
Yes, absolutely. And, one more question with regard to a slightly larger global perspective. Now, the sanctions, of course, have been put to hurt Russia, and Russia is going to be bearing the brunt of that. The entire economy is going to face the aftermath of all of that. But the sanctions are also going to, like we were talking about, hurt other economies as well. And the uncertainty is how long is this going to go on, whether we're talking about the war and then even post that situation, how long the sanctions are going to be, left on Russia. So your perspective on that in terms of that scale of uncertainty right now and the long-term impact of all of this?
Yeah, sanctions means it is not just the Russia itself, it is a two-way effect.
Yes.
Both the Russia as well as those who are imposing sanctions also, they will also get affected. And I'm sure that Russia will also retaliate with its own other measures. So ultimately, the entire world will have to pay the price for that. I mean, it is only the exceptional cases like in 1998. India could manage the sanctions imposed against India in the background of Pokhran nuclear explosion. And that is mainly because the NRIs came to the rescue of the country by heavily what you call subscribing to the NRI bonds, which was double the what you call the foreign assistance we are getting at that time. So, but in this scenario, since the Russia is also not a small economy, and both because in today's world, it is not that one country, all the countries depend on each other under the globalization. So both should actually think, actually the one should come to the what we call the discussion table and resolve this issue by discussing threadbare. I mean, what will be the impact? And it is not just limited to the Russia alone. It will have even other countries, those who are imposing that. Ultimately, the world growth, I mean, both the trade as well as the growth will get affected. When the growth gets affected, and that too after the pandemic, as I said, that 113 countries have been facing economic recession. Now, in addition to that, there is what we call the adverse effect of this war on all the countries that everybody will get affected, including India.
Yes, absolutely. Thank you very much, Mr. Shettigar, for joining us with your perspective and for breaking down the impact both in the short term as well as in the long term. On that note, we're going to slip into a very quick break. We'll be back with lots more.